growing and evolving based on the decisions you make, the directions you take. Chartered accountants have the breadth of skills, commitment to ethics, and global expertise to help your business thrive. We are uniquely experienced to make a difference to your world. Choose a difference maker. Choose a chartered accountant.
Hi, my name is Dr. Zivanaya Majambe. I'm excited to invite you to join the Environmental, Social, and Governance ESG Sustainability Certificate course offered by the Institute of Chartered Accountants of Zimbabwe, IPSAS. This 3 months, 100% online course is designed to equip you with the essential skills in ESG sustainability reporting, whether you're a professional or you're simply new to the field. So you will gain comprehensive understanding of the ESG sustainability frameworks and the strategies, including the reporting processes. With 12 verifiable CPDs, this course will prepare you to lead sustainably. So don't miss out. Contact the details that are written on the screen or simply scan the QR code right on the screen. Register now and let's work together towards a sustainable, bright future.
This is a Wimbiso marathon race. The reason why we are doing it is just for the sake of us raising funds for all those underprivileged young people that needs to be chartered accountants in the future. So this race is for a cause for us to nurture all young chartered accountants from varsity up to being a chartered accountant. So that's the reason for this race. So we ran for the cause and we ran for it.
Welcome, and we appreciate you joining us for the second edition of the ESG conference.
Vision to action. We have been talking about sustainability for many years, but it has come to a time where we now need to speak about the action. It's an ambition to be globally competitive, so we must aim for the top. It's actually less crowded up there. And I think as companies, as a nation, I think we need to have very strong ambitions.
Is adhering to these issues, there are options for financing and subsidies. I know a number of banks, before they give you a loan, they want to know what you're doing about ESG. So already by complying and by looking at these things in your business, you have an upper hand in terms of getting finance. A stakeholder loyalty, customer loyalty, it goes without saying. Your customers are aware and they trust what you're doing in terms of making sure that you're going green. You can get a lot of loyalty through that.
Once we incorporate climate risk into investment portfolios, it becomes obvious that climate products will become the next big thing. So I just wanted to add that banks can do more.
Through our small-scale farming project, we are training farmers in conservation agriculture practices based on the regenerative agriculture techniques, also known as foundations for farming, aka Pfumvudza in some areas. And so by implementing these conservation practices, we are seeing farmers being able to increase their yields by up to 400%.
As organizations, we need to walk the talk. We need to move away from the practice of churning out volumes, acres and acres of reports, and put that into practice.
I always think that decisions are supposed to be data-driven. I was left with an idea that this conference should also lead to generation of data on ESG in our country. Without data, I don't think we can actually know what is happening in the market. So one of the things which I would really want us to do is to create a community where we actually then share data.
Sustainability isn't just about the environment. It's reshaping the future of businesses. For chartered accountants, it's now a core part of financial leadership.
Investors, regulators, and clients demand transparency in sustainability performance. Chartered accountants play a key role in measuring, reporting, and ensuring sustainable business practices.
Climate risks, carbon pricing, and ethical supply chains directly affect financial stability. By integrating sustainability into audits and strategy, chartered accountants help businesses stay resilient and compliant.
The profession is evolving. Sustainability reporting is just now as critical as financial reporting. Accountants, let's be equipped with skills to lead this change because the future is sustainable.
Join the movement.
Join the movement.
Join the movement.
Join the movement.
Lead with sustainability.
Right. Good morning, colleagues. Ladies and gentlemen, right on behalf of the Institute of Chartered Accountants of Zimbabwe, I warmly welcome you today to today's webinar on budget implementation. Virements budget versus actual reporting under IPSAS 24. Enough budget is not the end of the budgeting process, as we all know. The real test comes during implementation, where the revenue is collected as planned, expenditure remains controlled, adjustments are properly authorized, variances are understood, and performance is reported transparently. I am Newton Mujena, Finance Director at Shaminuka Road Council, and I have the privilege of moderating today's session. Our speaker is none other than Ms. Modern Mutumwa, a chartered accountant by profession, Joao, registered with the Institute of Chartered Accountants of Zimbabwe and the Zambia Institute of Chartered Accountants, ZICA. He is also a registered public auditor with the Public Accountants and Auditors Board, PAB, of Zimbabwe and with the ZICA.
He completed articles of clerkship with the Institute of Chartered Accountants of Zimbabwe, IPSAS, through Ernst & Young. He has got 16 years experience in accounting and auditing, spanning professional practice, industry, and firm leadership. Serving IPSAS Council member, sitting on the Institute's Audit Committee. Mr. Modern Mutumwa, welcome to the podium.
Thank you, Newton. Thank you for welcoming me. I'm sure I can start my presentation now. Confirm?
Yes, you can start your presentation, Ms. Mutumwa.
Okay, it's fine. Allow me to share my screen. Confirm you can see my screen.
Now it's clear. You can see
On
your screen.
IPSAS 24, the presentation. Confirm, Newton, that's the screen that you are seeing?
Yes, we can.
Okay, no, it's fine.
Thank you. Yeah.
Thank you, Newton, for the introduction, and thank you, everybody who have joined this webinar. I think something that also needed to be added there on my resume. I'm currently the training officer for the Ministry of Finance, for the professionalization, working with the ministry in terms of the training records for the students. I'm sure I have worked with quite a number of students. So I think my interest is also in the public sector from that perspective, trying to professionalize how things are done, moving away from the past into what currently needs to be done, what the world over is doing. So in terms of the, I'll start my presentation here on the budget. I'm sure, I believe members here, you have been involved in budgets one way or the other, maybe just as end users, but also maybe as some being involved from the start. Our learning objectives for today is to understand the IPSAS 24 disclosure requirements for the budgets, and also to assist in the preparation of combined budget versus the comparison table, which is also key because once the budget has been done, they also need for a comparison where how far did we go as per our budget? Did we overshoot? Did we do less? Or our budget was 100%, which is really the case. Then also assist in the writing of a robust audit proof, variance and explanation, then link budget execution to service delivery outcomes. And in terms of the budget information in financial statement as the IS 2024, we want compliance to accountability in the Zimbabwe public sector. And we are here to explore IPSAS 24 not as a burden, but as a tool for transparency and accountability. What does IPSAS 24? What is IPSAS 24? And what does it require? It requires a comparison of budget versus actual amounts within the financial statements, putting execution of the public budget on the same page as the numbers. And what does it not change? It does not change how you prepare the budget, of course, only how you report. Basically, at the end, how do you report this? What's obvious in terms of budget preparation, you know how you've been preparing, but at the end, there is need to say this was the budget and this is how the actual performance went and what were the variants there and the reasons for that. So you find that this has to do the accountability at the end. And this applicability, this is a public sector standard. It's only for the public sector. And it has no IFRS equivalent standard that the International Financial Reporting Standard, there is no IFRS. As you have found that most of these standards, the IPSAS, most of them, they were derived from IFRS. But you find this one, it does not have an equivalent in terms of on the IFRS side. And basically, it pushes the public entities to explain their use of taxpayers' funds. And as we say that a budget is a legal contract with the people. You say we're going to do this, basically, it creates a legal obligation because you say this is what we're going to do. So IPSAS 24 applies if you prepare accrual-based financial statements and if you also have a publicly approved budget. So you find that in Zimbabwe, most entities in the public sector fall under this scope as guided by the Zimbabwe Financial Reporting Manual. So you find that you will be, because there is a public approved budget that is for various entities and ministries. Because of that, now you fall under the IPSAS 24 requirements. Some key definitions here. What an approved budget? This is a legally authorized spending limit established through the laws, Appropriation Act, government ordinances, or other official decisions based on expected revenues for the budget period. So we find that annually, I think the minister of Finance and Economic Development, he will come with the budget, and this budget goes through the parliament where there's debates, changes are coming. Then at the end we have an approved budget. Then because of that, now we will have an original, but this is an initial approved budget for the period. This is the one that is usually it's the initial that is approved at the beginning of the period. But let's look at all these definitions and bring them together. Then we have a final budget, original approved budget adjusted for all authorized changes during the period. Reserves, carryover, transfers, allocation, supplementary appropriation. This is taken care of whatever changes that would have been made from the original budget. So you find that this is the final budget. They've been taken into account all changes. Then you find we have also actual amounts. The real expenditures and revenue incurred during the budget period, also called the budget outturn or budget execution in the same jurisdictions. So you find that, like I said, budget is not usually what happens because of there will be changes or other factors that also come into play. So you find that the actual amounts, these are the real, and these are the ones that will be compared with the budget. So we have three pillars for IPSAS 24. The first one, we have we compare. So we find that we compare the budget versus the actual. So you find we have to do a like for like. What is it that we had budgeted for investors? What is it that we had as the actual or expenditures or the actual revenues for the period? Then also the other pillar is to explain, because it's a budget and there are actual position that will be there at the end of the period, and there's a requirement for IPSAS 24. Like I said, like what you said, this is required at the end of the period. So you find that at the end there's a requirement to explain any material variances with the credible and the quantified causes. I think we'll explain this later. Credible and quantified causes. What happened? Like I said earlier on, that the IPSAS 24 requirement is that the actual and the budget, these need to be on the same page so that comparison can also be done. Once comparison has been done, explain what is the reason for any material variances. This has to be credible and this also has to be quantified. Then other pillar is to do with the reconciliation. You need to reconcile the different accounting bases to one common. You find that there may be cash basis, but like I said, here we are looking, the requirement is we need to do an accrual basis position. The audit finding from the auditor general is always that there's always an approved budget, and there's always a variance with what would have actually happened. This can be in both directions. There could be an overspend, there could also be an underspend. But let's look at the situation where we are saying that we have an approved budget of, in this case, we have an approved budget for 198 million Zimbabwean ZiG. Then we have an actual expenditure of 55 million. You find that there's an underspend of about 143 million, which is 72%. You find that a requirement for the comparison between the actual budget and the expenditure is that you need to explain what is it that caused the variation. So I'll give an example for a weak variance explanation. This entity can just say, because they have compared, now they are explaining. The comparison 188 budget and the actual 55. The explanation, the entity reported 72% underspent, but did not adequately link the shortfall to service delivery outcomes for beneficiaries. Naturally, and this is easy to say, okay, we didn't receive the 198 million, we only received 55, and these were the expenditures. And because of that, we didn't perform service delivery or 1, 2, 3. But you need to know and understand this, that at times when these audits are done, there is no adequate explanation, something that is credible. That, like I said, something, an explanation for a variance to say budget versus actual, there was a variance of so much because of 1, 2, 3. So what the Auditor General always does is that poor variance explanation will always result in a weak budget versus actual disclosure. And this is always a finding that is there. So you find that our explanation should be credible, and the explanation that comes there should help future budgeting process so that it can be done properly. What caused it and what has been the effect? Not just, we need to do a root cause to say, yes, we didn't receive, but as you see going forward, you see that we tried to put more information which will help in terms of how we can avoid an audit finding as per the auditor general. Here, the key issue in this case I've given is non-release of funding by Treasury, which led to a weak budget versus actual explanation. Comment given variance due to non-release of funds. This is not a good example. Why? Because it fails audit review. It lacks cause and impact. We need to indicate at the end the cause. Yes, there was no release. What is the impact? Like I said, that the requirement for the IPSAS 24, our explanation for the variance, it should help us going forward, so that the budgeting process can be done properly. We need to ensure that whatever we do going forward is based on actual, because like I said, budgeting actually, the IPSAS 24 is not changing the way we've been doing budget, but it will help going forward in terms of how the budgeting process is going to be done. What we need is to make sure that we give proper input for going forward. What are the causes of the variances? Here's an example of a good explanation of our example as required by IPSAS 24. The overview, yes, we had 98 million, is 198 million on the budget. Then the actual year was of what we received was 55, meaning to say 72% underspent. The causes, non-release, K85% in terms of why we had our underspending was we had budgeted 198 and 55. We only managed to do 55. Okay, non-release 85%. Then procurement, I'll explain. Procurement delays 10%. Capacity constraints 5%. Why is it like this? Because we are saying it's not always that we, like a layman said, we just say we didn't perform the 198 in terms of what we were looking to do in terms of our budget, but in terms of we only managed to do 55%. Is it only really the non-release of funds? It may not be so. There could be other issues that also have to come through. So we need a holistic view to say, okay, we were supposed to do our expenditure with budgeted 198. We managed to do 55. These are the reasons. Yes, there's non-release of funds, or there could also be delays that came through. There could also be procurement delays that led us to avoid because times you may have received the funds, but there are also issues to do with procurement delays. You find that there are situations where you say, okay, the budget was so much, but we also had so much money was received, but not everything was spent. Let's include every reason why our budget was so much and our actual expenditure was so much. And also, there could also be issues of capacity constraints. Maybe you wanted to do something, but in terms of its availability locally, that on the procurement, the availability, it was not there. So it also had to take time. Maybe now it went into another accounting period, which also now affected our procurement. Now, because like I said, we are looking on an accrual basis, not on the cash basis. We are looking at the accrual or basis in terms of the accounting. But there could also be capacity constraints. Let's look at the organization as a whole. Do we have the capacity to be? Did we have enough capacity to manage the 198? Maybe yes, maybe no. In the event that is no, what is it? Those are the issues that also need to be brought out when we are given an explanation for a variance. Maybe as an organization, we didn't have the capacity to be doing what we had initially said, budgeted that we're going to be doing, providing service to this extent. But unfortunately, we don't have the capacity. These capacity concerns can be in various forms, has to do maybe with the equipment, human. Those are the issues that also needed to be brought. Why? It enables future planning and also gives further information for future budgeting. But apart from budgeting also, it also helps in terms of planning, and it also brings information in terms of when an intervention can also be made, and also say its impact. Like I indicated, you also need to say what is the impact of this. In this case, I said 80% of beneficiaries did not receive the services. Let's bring this information out. Yes, 72% underspent, but 80% of beneficiaries did not receive the service. Are we able to quantify this? If possible, let's bring this into perspective. Let's bring this information so that it helps future planning and also helps in terms of interventions that is that is required. Like I said here, this is credible, quantified, and it's also linked to outcomes. We have quantified to say, okay, on the over, generally we have 72% of the budget that was not spent, but we have quantified, we've broken down this. What is the root cause analysis? What is the root cause for the why we have an explanation, why we have a variance here. So, as a golden rule, actual amounts must be reported using the same accounting rules, classification is structure, entities, and reporting period as the approved budget, so that the figures can be directly compared. Same accounting rules, we need to make sure that like for like, the comparison has to be the same. It makes it easier for comparison. Actual amounts should be reported using the same accounting rules, the classification structure, the entities, and the reporting period as per the approved budget. As you see that there's a push for accruals accounting, that's the purpose for IPSAS accounting, to make sure that we move from cash accounting but to accrual. What is it that we incurred versus what is it that was budgeted on an accrual basis? Where there is cash, like I said, compare apples with apples. Cash versus accrual must be reconciled. You cannot compare cash to accrual directly. We need to reconcile cash accounting to accrual. If the budget is on a cash basis, naturally you would also compare on the cash expenditures and cash income. But if also the budget is on an accrual basis, let's also compare actual expenditures and actual income on an accrual basis, so that we can track, we can compare properly. This will enable the explanations that can make it easier. Where there is no proper comparison, or where we are comparing unlike we have different bases, it makes explanations difficult. So there is need to make sure that you reconcile cash accounting to accrual, so that you can now compare the actual incomes, expenditure with the budgeted incomes and expenditure. It makes it easier. Then let's talk about the reconciliation bridge. Let's say that where you have a budget that is approved now, or as on a cash basis, and now for us we have an accrual basis for the actual performance of the entity, the income and the expenditure. This you are looking on an accrual basis, but the budget now is on a cash basis. Definitely that means there are adjustments that have to be done between the cash basis and the accrual basis. What is there is the issues to do with we have to look at the issue of timing. Because like I said, for cash, we're just recording when something has just happened. But on an accrual basis, okay, for cash, we're recording when money is moved, a payment has been received or a payment has been made. That's when something is recorded. But now on an accrual basis, the basis now has to be different. We are looking at whether a transaction itself is happening irrespective of the movement of money. So we have issues to do with the timing. We have also issues to do with the ended and the classification differences. These are issues that we now need to look at to say, okay, it's fine. When did the transaction occur? When we now need to move from cash to accrual basis, we look at the timing. When did the transaction occur? And also, are there any other differences classification-wise? Because at times on an accrual basis, there may be other issues that may also be looking, which we are saying, yes, there is no cash that has moved here, but let's also look at it to say, in terms of IPSAS, in terms of the requirements for IPSAS as a whole, what has actually happened that we need to reflect in terms of what has what has occurred. So you find that we need to reconcile the cash basis and the accrual basis. Without reconciliation, actually the comparison becomes invalid. You can't compare things that are not on the same platform. So this is a requirement for the financial statements in terms of what is required between the IPSAS in IPSAS 24 movement from cash basis to the accrual basis. Now on the reporting options, the presentation options, we have a where you can do a separate statement, a standalone statement of comparison of actual and of budget versus the actual. Where you're comparing these two, the budget versus the actual. Where now you find that, like I said earlier on, this is something that you have to do at the end. So you need to compare budget versus actual. You can do a separate statement because at times now, because of times of transition issues and timing issues, and people that we have a way that we've been doing before, now we're trying to make sure that we do we comply with IPSAS 24. Most entities definitely would prefer just to have a separate statement to ensure that this is what has happened. But you find that this is what you need to do to make sure that it's there. There to be an original budget, like what we explained earlier on. Then the final approved budget, this also needs to be put in. Then we now also have the actual amounts in comparable basis with our budget, the final budget. Then we now have a variance. So you find that the final budget and the actual amount, these two, you find basically, well, I say the budget and the end budget and the actual amount, they have to be comparable. So when we now need to compare, we have to compare the final budget and the actual amounts. And this, from there, you now need to do what? To put what? The variance. To say, okay, between the final amount and the actual amount, final budget and the actual amounts, this is the variance that was there on the what was received in terms of the revenue, and also on the expenditures side. From there on, you now give your comments for all the material variances. In terms of materiality, it's not a one size fits all, unfortunately. This has to be per entity or per organization, depending on the circumstances. And the materiality can come in two forms. It can be basically quantitatively, where you are saying the actual amount differs from the budgeted amount significantly when you are looking at the numbers. And you say this actually needs a disclosure. So this needs an explanation. That's when now you give your comment. Then they will have an issue where you may say, but it may not be that big, but for some reasons, because of the nature of the organization, definitely this just need to be disclosed because of a certain, there's a reason why it just need to be disclosed, irrespective of the quantum that is involved. So you find that that would be a qualitative issue to say there's a reason definitely why we need to give an explanation for this variance. So like I said, any material variance has to be explained. So the materiality comes quantitatively and the materiality also comes qualitatively. Looking at the nature of a budget line item, that's where the qualitative aspect comes in when we say qualitatively. Like I indicated earlier on to say, we have to indicate the mandatory information that has to be put in. Like we explained about the original budget earlier on, the final budget, then the approved budget. Then also had to do with them to say this is what we actually spent. From there, you also give an explanation. Then every mandatory column must be present, and every material variance must carry a comment explaining cause and impact, not just the number. So you find that it's not just giving a number, but it's also, this has to do with like I indicated, cause and impact. This has to be included. This has to be reported as per the requirements of IPSAS 24. I think before it's easy when people just say our actual is so much and our budget is so much, the difference is so much. Reason, like I indicated, we didn't receive funds, that's all. But the requirement is let the explanation indicate the cause and let it also indicate the impact of what would have happened. It's key and it's important for decision making and strategy wise going forward. It helps where there is need for any intervention that can be made. Here's a template for the statement of comparison of budget and actual amounts. Like I said, budgeted amounts, actual amounts, these have to be there. Then the difference and the comments accompanying for each material variant. This is the Zimbabwe Financial Reporting Manual, where this is a requirement as per the requirements for IPSAS 24. Implementation roadmap. Like I said, there's always to let's confirm the scope. You always need to understand, does your entity have a publicly approved budget? This now going forward, you need to have this mind. Does your entity have a publicly approved budget? If yes, IPSAS 24 applies. So we find that most public sector entities and organizations, because of the budget, they fall under the scope of IPSAS 24. Like I said, don't assume, check whether your budget is formally approved by legislature. Because obviously it goes to parliament where where there is an approval that is done. There may be changes, that can happen. So you find that you need to ensure that you confirm this. Then step number 2, identify basis difference. What basis is your budget prepared on? Is it cash, modified cash, or accrual? Modified meaning to say there's a mixture of some accrual and cash. So you understand the basis of your budget. Why this is important, so that it can help you in terms of the reconciliation that we earlier talked about. on, and also in terms of the comparison that will be required going forward. What basis are your financial statements on? Usually accrual. If you are following IPSAS, now the financial statement will be on accrual. So you find that these, in the end, you need to have a reconciliation. If your financial statements are on accrual and the budget is on cash, now in the end, we need to do a reconciliation of this. From there, you need to map up the difference between the two. What are the causes, and make a reconciliation so that going forward in terms of the reconciliation and comparisons, the comments that will be required, it can make it will be easier. Then build a data collection system. You need the original and final budget. Also, you also need to have funds that have been received, the amounts of the releases that have been made from Treasury. Commitments, you also need this, contracts, purchase orders, the actual expenditure, variance calculations. You find that, let's say, because of IPSAS, we are recording on accrual basis. So you need all this information, mainly commitments, or everything that you already have. Yes, it hasn't been paid, but it's already a commitment. Make sure that you also have that information. Any contracts, anything that creates an obligation for the organization, you also need to have it so that you feed it into the system. It makes it easier for apart from the compliance with IPSAS itself, but also for comparison. We need this to be there. The actual expenditures, you also need to it also need to be there. Then from there you do your calculation. Now let's talk about the issues to do with the silos. Data often sits in silos, and you need to bring together treasury data, what comes from treasury. Then you also need procurement. This is obvious within your organization. You need all the information from procurement. You also need the accounting data. This now you need to consolidate. Treasury, obviously, there's budget that comes from there. There are also funds that are received from treasury. Then within the organization, the procurement, the actual expenditures that would have happened, any commitments that would have been made, committed but not paid, or invoices that would have been purchase orders that would have been done, invoice that would have also have come through but not have paid for. This also, I think that this sit in the procurement. So you find that the purpose for the now accounting, you need to in accounting data, like I said, from IPSAS perspective, there has to be accrual accounting that has to come into play. This will now, because we need it, apart from what has been paid for, we also need anything that is accrued for from an accounting perspective. Then we need to consolidate these two. We need to consolidate these three. We are now looking at, I think the template that I have indicated earlier on. This information should flow through into that template in its various forms. It be on the revenues or also on the expenditures. Then also now need to there has to be templates. It's something you don't need to be that complicated, Word or Excel, but to enable proper comparison, basically. And you now need to have an explanation note for variances in terms of the template itself. Like I earlier on said, there has to be a variance analysis that has to be made. Like I said, they don't reinvent the wheel every year. Build a template so that when the financial year ends, you just plug in the numbers and fill in the placeholders. It's just a template that has to be met. Prepare a template where your budget, the actuals, variance analysis, the variance, and also the comments. Like I said, at the end of the year, IPSAS 24 kicks in. Compare the actual from the budget. You just need to plug in the information that you would have gathered from treasury, from procurement, and from the accounting. Then one key things also you need to train and integrate train budget and accounting staff on the new disclosure requirements. It's important. I'm sure participants here, they're part of the teams that will be that are affected by this one or the other. So there is need for you to get training, and also the accounting staff, they need to understand this the disclosure requirement, so that it makes it easy for everybody to be aware of what the expectations are. Then incorporate the comparison table into the year-end financial statement production schedule. Like I said, this template that you do it as per the requirements IPSAS 24, you need to incorporate it at the into the financial statements. Like I said, some would rather prefer to just to have it as a separate statement in the financial statement that they are preparing, just to indicate to say the budget versus the actual was so much, and in the various budget line items. The best templates fail if people don't know how to use them. So that's why I say there's need to train your finance team, ensure IPSAS 24 disclosure is included in your official year-end closing checklist. This is how you operationalize IPSAS 24. You need to make sure that it has to be part of the checklist at year-end closing, so that it's not forgotten, because it's a requirement for IPSAS 24. Just ensure that this forms part of the financial statements. Here are some of the common challenges that you always face. You find that there's poor linkage between financial data and service delivery outcomes. You need to cross-link with service delivery reports to ensure that financial data is linked to service. Let it not be something that is separate to say we have, in terms of service, this was happening. Let's link these two. So we find this is one of the purposes of IPSAS 24. Like I said, when we are giving the explanations why there is a variance, let's link the two. Let's link the impact and the impact of any deviation, it'll be over or under. Let's link this so that planning, it also helps planning going forward. There's also classification mismatch between budget and accounting codes. You need to have a mapping table whenever you are doing this as per the requirements of IPSAS 24. Like I said, mismatch budget and accounting. There's also a mismatch where you find that we have a cash and the accounting. We also said earlier on that you can't compare, unlike variables. You need to have like for like, so that it makes it easy for comparison. Then one of the challenges also no explanation culture around variance. Like I was saying earlier on, it's actually an issue. It's easier to say, no, we didn't receive this, we didn't do this because of one to the, but there has to be a proper culture to say, let's go to the root. Why didn't we achieve so? Why didn't we go so much? We need to be so conscious in terms of what we do when we are looking at the explanation for variances. Let's be conscious the cause and the impact. This need to be, like I indicated here, you need to assign a responsibility to program managers. There has to be somebody actually responsible. I'm sure this will make it easy. As long people are conscious and somebody is assigned, it will help in terms of data gathering Then siloed systems, treasury, procurement, accounting data sit apart. You find that at times it makes it difficult for people to really consolidate this information. But what is key is when people are aware, they'll definitely try to make sure that this information is centralized within an organization. Information that comes from the treasury, procurement, accounting information. Somebody being conscious will make it easier to say, this has happened, let me get this information. Procurement, let me have your information. On the accounting side, guys, let me have your information to make sure that when we do our statement at the end, it makes it easy. Because whenever something is new starting, definitely you find that there will be it always presents challenges, but it's important for compliance with IPSAS 24. This is a disclosure checklist that I've been saying this from the start to say there has to be a comparison table, original and final budget, actual amounts, received and spent, variance has to be calculated and explain the variances. Where there is need for reconciliation, you need to reconcile the two, cross-reference them. Then so this is a disclosure checklist that has to be there. Once everything is ticked there, I said you are actually compliant with what has been required by IPSAS 24. So this is the presentation that I have for you on, because I think it's something that has been noted in past report for the AG regarding the where budget and actual they have been variant but not properly explained. I will leave this for questions so that answers can also be taken. I'll stop sharing. Back to you.
Right. Thank you very much, Mr. Mutumwa. Now we are going to the question and answer session. Question and answer question. If you've got a question, you just you have to react by raising your hands. Just raise your hands if you do have a question. Mr. Pascal Mjoma.
Yes, we can go on. We can start with Mr. Mahambe. Yes, we can go on. We can start with Mr. Mahambe. I have unmuted you. You can unmute your mic and speak.
Thank you, Pascal. Good morning, Mr. Mutuma. Good morning, Mjena. Thank you for the presentation. I've got only two issues. The first one is the presentation seems to have been confined to central government setups, but you also have got state-owned enterprises. The reason why I'm saying so is for some of the state-owned enterprises, their budgets do not go to parliament. They are approved by their respective boards. However, in the reporting manual, I think the option to decide whether its budget is public or not was withdrawn. So even state-owned enterprises are supposed to comply with IPSAS 24. And then the other issue is to do with I heard Mr. Mutuma talking about budget, original budget, and whatnot. But I assumed the numbers Mr. Mutuma is referring to are ZIG numbers. So if my budget, let's say for 2026, was done in 2025, So when I get to the end of 2026, comparing that budget to the actuals, which is reported on a hyperinflation adjusted, would not give me a correct variance. So if the budget is not hyperinflated, the comparison would not make sense because the numbers would be different. I think I did not get that from Mr. Mtua, maybe a comment from there. And then the other issue, which I did not get, is to do with administration costs, which are not linked to budget outcomes. So budget outcomes primarily are linked to the mandate of the mandate or the core mandate of most of the government entities, but administration is there to support. So if I've got a variance on admin costs, how do I actually report in the manner that Mr. Mtuma has alluded to? Thank you.
That's great. Thank you, Mr. Mehambe. Mr. Mtuma, can I go on with all the questions or you can answer them each by each?
I think get I think 2 more speakers.
Okay.
Yeah.
Okay. That's great. I'll move on to Mr. Tonderai Macha. I've allowed your mic to unmute. You can unmute and speak.
Okay, thank you very much, Mr. Mtuma. I just wanted to find out, sometimes you budget to buy vehicles, let's say in 2026, and due to the procurement processes, you delay, and then maybe you end up buying that vehicle maybe during the year 2027. So I just wanted to find out, since we are actually using the accrual basis, that the procurement of those vehicles, should we actually do the budget comparison during this year? I submit.
Okay, thank you so much, Mr. Tonderai. I'll allow now Cynthia. Your hand is up. You can unmute your mic and submit your question. Cynthia, you can unmute your mic and
Hello, can you hear me?
yes, we can hear you. You can go on.
Mine is not a question, but I just wanted to ask if you can share slide 20. I didn't get up the explanation. We shared slide 20 that you presented.
Okay. Thank you, Cynthia. Mr. Mtuma, these are the questions that we have from the three delegates. I think just after that, we can then move on to Mr. Love Mo Mazuru. Mr. Mtuma, over to you.
Okay, thank you, Pascal. I will start with Cynthia. Yes, definitely. I'm sure I can share with the slides with the IPSAS team. I'm sure they can be able to share with everybody who has joined. I'll share soon after this presentation. Then I go to, I think the second speaker talked about delays in procurement, to say when should we report something. So like I said, because of the accrual basis, the purpose why it's important to have to have knowledge of what is happening, like I indicated in the treasury, procurement, and accounting. This will help to see at what stage are we going to record. Just because at times you intend to purchase the vehicle, it doesn't mean that from an accrual point of view, is something that you have, yes, you have indicated it in the budget, but there are now processes that now have to happen. Was anything done? Was any contract done? Is there any purchase order that now that has been done from the procurement side? At what stage from the accounting perspective, do we say, okay, it's fine, we should be able to accrue this? You find these are some of the, like I said, these challenges where you find departments tend to be operating separately from each other without the issues being looked at holistically. So at times it's not, you can't, it comes now as a variance analysis to indicate that yes, we had budgeted so much to procure this vehicle, but now there were delays that happened in procurement. This is, like I said, this is important for planning purposes. Why this, the route, why the motor vehicle was not purchased. Yes, maybe funds have been there, but we had these issues. Let the issues be explained to say, our actual performance was nil because of 1, 2, 3. It's it's something that should be able to support an organization in terms of the planning. If there were capacity constraints, like I indicated, let this also be indicated. If there were procurement delays, let this also be indicated to say, like earlier on, I indicated something to do with to say 85%, 15%, and we couldn't do this. Let these issues be disclosed. I hope I have answered that. Then the first is from George Mahembe, if I get the name correctly. You talked about the issues to do with the inflation, where you say that obviously a budget is done, let's say end of year 2025, and we now come to end of year 2026, where this now needs to be this now needs to be done. And in an inflationary period, definitely there will be the issues to do with the timing. The inflation comes in, what was approved earlier on may materially differ, like what we used to see. Times it's maybe double or 3 times, depending on if it is hyperinflation. But you find that like what you said actually is correct to say we need to compare like for like. What was the basis? What is the position to say we had our budget was so much, but if we were to compare it at the end of the year, what is the budget now at the end of, if we were to hyperinflate it? I'm talking, hoping that obvious our currency of late, I think there's been some stability, but now taking in George's question previously, where there was such proper comparison can only be made when we put everything on the same or on a level surface. So obvious the budget needs also to be uplifted. We need to put in the indices. If we are to do that, it's something that I had obviously explained. I looked at what has been obtaining now in our environment. But I concur with George definitely. Where there is inflation, you need to make sure that you compare like for like. Things have to be on the same platform. You need to put indices so that things can be comparable. Then on the issues to do with the admin costs, where if I got you well, say that there may be admin costs that are incurred, but these admin costs, they are not naturally in the budget, but in the day-to-day running of businesses. These costs always come in. Yes, it's true actually. So you find that on the actual, there is always the expectation is there is also need to come through. I will always give an example. At times where you used to have bank charges, you may not predetermine them. when you are doing a budget for even for an agent or something, but in the end, when something comes on the actual, there will be these costs always come in. So in the end, they also needed to come. So I find this, as long as something that is a material cost, it also need to be disclosed, but also need to be explained what were they. Naturally, times when the budget is being done there, you may not have foresight of the actual admin code that may be involved. Some things may also you may not confirm them at the beginning, but definitely these also need to come through. Then also need to come through now on the actual, and an explanation has to also come through. Naturally, the issue has to do with these are not predetermined, they start, but because they are required for in terms of operationalizing things, definitely these admin costs has to come through. Then the last question from George has to do, his first question actually has to do with I think the presentation mainly focused on it excluded the other, let me say, the parastatals, if I heard well. Definitely it's correct to a large extent, because I'd focus mainly on the parastatal. But you find in terms of the principles, if you are adopting IPSAS 24, definitely even the parastatal, now you also need to put the comparison between actual versus the budget. This also has to come there. As long you are adopting IPSAS 24, I submit. Thank you.
Okay, I'll allow Mr. Love Momazulu to come through with his question. I have enabled your microphone. You can unmute and speak.
Thank you so much, Mr. Mjoma. Thank you, presenter. My question comes from an analysis between the original budget and a final budget, where an entity makes numerous supplemental budgets and sometimes reallocations, virements during the year. How should it ensure that the final budget remains a meaningful basis for assessing performance rather than simply becoming a reflection of actual expenditure? Then my other question will be on unspent funds. How should an entity account for and explain significant unspent budget allocations at year-end, particularly where the underspending results from the delays in the release of funds by sometimes the treasury or another financier, rather than from management's inability to implement the budget? I'm coming from a position where a budget is used as a mechanism for assessing the credibility and reliability of the entity's budgeting process. I submit.
Right, Ms. Mutunga? Can you answer that question?
Let me again go back to your question so that I confirm that I have understood the questions correctly. The first one, you talked about the original budget and the final budget, where you find that there are many, where you indicated many changes that happened during the course of the period. And in the end, you find that this final budget reflects an actual budget. You say, how can we ensure that we have a final budget? If I go to
You did got me maybe partially. I talked of we've got supplemental budgets, reallocations, some virements during the course of the year. And my question was, how should the entity ensure that the final budget remains a meaningful basis for assessing performance rather than simply becoming a reflection of the actual expenditure.
Okay, I understand. To say because of the change that happened there, let this final budget actually be used for meaningful performance. Instead, that at the end, it's just me the actual expenditure, because times the Virements, whatever happened during the amendment that comes through, they are following a certain a pattern of what would have actually happened. Yeah, definitely. I think some of these issues is more from first issue to say, when are we getting this final budget? Because it doesn't help actually that you get a budget, you get your final budget, which is more or less like what would have actually happened. Yes, funds would have moved from one account to another, one agent to another, one ministry to another. But in the end, you are now saying, let's now have a final budget based on that. So for me, the key thing is mainly, like I said, it's a timing issue. When do you have your final budget? In a budget, actually, like I earlier said, actual versus budget, there has to be a comparison. So some of the material variances are also supposed to be explained. Say, because this is what has happened, with our actual position, it may be higher or it may be, but even if it is higher, or or even if it is lower, let there be an explanation. But naturally, like for me, because of timing issues, terms when some of these supplementary budgets are done, they also tend to now affect, and actually your concern comes through. Instead of us being measured our performance based on the approved budget, some things happen, supplementary budgets come in, movements that happen within our budget, and in the end, it's more of a mirror, and the assessment actually becomes meaningless. But so for me, it's mainly also, I think, on the timing issue. Some of the things, they may not be within us, the operational people's control, because at times at a higher level, something this is where some of the changes are made. It be at board level, ministry, treasury level. These things are coming through. But for me, the key issue is actually timing. And also, one of the issues that I indicated has to do with there's also an issue to do with training of the people. And you find that when we are doing our budget, at times like I said, we don't change the way we do our budget, and IPSAS 24 doesn't change it, but it's mainly on the comparison actual versus budget. So we need the experience also need to come through. How has been the performance in the past, so that when the budget is being done, the budget takes into account history and past performances to ensure that we have something that we can work on earlier, something that is approved earlier, and the changes that may come, they shouldn't be that significant. But like I said, in terms, they may be so significant to say our initial budget actually it was is actually very it's affected significantly because of supplementary budget, Virements, etc. that come through. So for me, those are some of the issues that also need to come through. There has to be the budget preparation itself has to take into account what has been happening in the past, so that we have something that we actually work with from the start, without too much amendment. But also the timing also that has to come through in terms of when these issues are done. Then the other question, I think if you can come through, you talked about the unspent funds. I think I didn't get it quite well, the second question.
Thank you. I think it's somehow related to the first one, and you have partially answered it as well. I was coming from a background where normally for example, Treasury or some other financiers releases these budgets towards the end of the year, and you have got little time to do the procurements and everything. Then at the end of the year, you've got a huge unspent budget allocations. So I was asking, and usually in central government, those unspent resources will then be taken back to Treasury, and it may portray a situation where management as utilization of the budget is somehow very, very, very questionable. Okay. So I was asking how best you can account for such, especially where you are coming from a background where the budget is used for assessing the credibility and the reliability of the entity's budgeting process.
Okay. Yeah, no, sure. I agree with you. Yeah, thanks for that. I agree with you to say when you are measured your performance, obvious to say your budgeting process, and in the end there are some significant unspent funds that are returned. You find that is actually everything will come to your performance. It is bad. Timing issue actually comes into play. When are the funds released? In terms when is the budget approved? All these things come into play actually to say we need to. So you find that in my presentation I talked about the issues to do with the release of funds from Treasury. It can also be a factor that also has to come through in terms of the explanation of the variances. The timing itself, it doesn't help that funds are released towards the end of the year, but the budget was approved in February. And during the course of the year, these challenges had been happening. Then also had the indicated procurement delays. But in this case, we find that the significant component in terms of the explanation it will also be, say, delays of funds, but also now it cripples the other subsequent processes that you have to come through, issues to do the procurement. It may be also be crippled. In one way or the other, also, if you are to have a thorough analysis, I also talked about capacity constraints. It also comes through, but it also affected one or the other if you are relying mainly on funds that are coming from Treasury, and during the significant portion of the year you are constrained, definitely it affects you. Thank you.
Right. Thank you very much, Mr. Lutuma, for the clarification. Maybe for the sake of others, I heard you talking about the Virements. Can you maybe elaborate on what is the Virement and how is it differing from a supplementary budget?
Okay. A virement actually happens when you find that money or funds are being transferred from one part of the budget to the other. There may be a reason that would happen during the course of the year. We have budgeted that to Ministry of Health, for example, we should be giving so much funds, but something happens during the course of the year. There is an outbreak that has happened, and immediately you find that the Ministry of Health funds have been quickly depleted because of a pandemic that you could have happened. So, but on assessing, find that you may say, okay, we had also allocated so much money to, let me say, a Ministry of Environment. But say maybe there may not be much need, but let's transfer the funds. This is at a from I'm talking from a treasury point of view. Let's transfer funds, but you find also even within an organization itself, you find that an organization you may have planned to do program A and program B, but because of reasons, you find that in the end, you say, funds that we've allocated to program A, why don't we move them to program B? Because of reasons 1, 2, 3. This is within the same budget. That's for the Virements. But now you find that a supplementary budget. This is a budget that is coming on top of an original budget that was there, in an approved budget that had been done. So you find we are looking, it may go right across from the top to the bottom to say there may be issues that something extra or materially that has happened. And let me talk for, I think George talked earlier on about, let me say, about inflation. Maybe the budget that was done had been eroded by inflation. So in the end, there is need for something supplementary to support its budget. So these are the differences that you find that within between the two.
Yeah, thank you very much, Mr. Mutunga. Well explained and well elaborated, and I think everyone in the government fraternity, especially, has heard Mr. Mutunga differentiating between Virements and a supplementary budget. Thank you very much. I asked that question for interest's sake because it's almost a talk which we hear year in, year out, people talking about Virements. Thank you very much, Mr. Mutunga, for that. Any other question from our participants? Silence means a lot. Right. Right, Mr. Mutunga. There's a question which is saying that, may you please come again on Virements?
Okay.
It's a request from one of our guests. Please come again on Virements and supplementary. This is from,
okay, no, it's fine.
Sam Keliso.
Yeah, from Sam Keliso, I saw that one.
Right.
A Virement, like I said, this is when it can happen from treasury perspective, or it can also happen within the organization itself. A Virement, we're looking at the budget that was there. Within that same budget, let me say, organization or can move surplus funds from one organization to another where there is need. From the same budget, that would have been approved. And there may be, I gave an example where I would say, if there is the Minister of Finance needs extra funds, but within the Ministry of Environment, it's surplus funds, it is sitting on that it had been allocated, but it's not using them because of various reasons. And the Ministry of the Ministry of Health, there's a pandemic that is arisen. And quickly something has to be done. So funds can be transferred from Ministry of Environment to the Ministry of Health. That one is a virament. I can also say within the same organization, let me say within your organization, you have an approved fund that you are using starting 1 January 2026 without any other budget. But for a certain reason, there may be, because a budget, there could be some unforeseen things that can happen. You were planning to spend so much money for capital expenditure, but you realize that maybe during the year, those funds have been sitting, but operational expenditure, the day-to-day expenditure, salaries are outstanding for one reason or the other. So in the end, you say, let's move funds from one department to another. And this, you are trying to cover a need in another department or ministry with surplus funds that are sitting in another department or another area. So you find this is where a virament comes in. Now, a supplementary budget, you are saying on top of the budget that is already there, the minister comes in and say, beginning 1 July, we have another supplementary budget that is running across all ministries. Ministry of Defense, we are giving them so much. Ministry of Finance, we are giving them so much. So you find that in the end, you are creating, you are adding on top of already an existing budget when you do a supplementary budget. Thank you.
Thank you very much for the explanation. I hope the guest has been answered. Yes, Ms. Mutunga, the guest has confirmed that this is superb. Understood your explanation. Yeah, exactly. So, do we have any question from anyone? Or Mr. Tonderai Marange?
Yes, thank you and good afternoon to you all. I think there's been a norm in the industry, probably an innovation from the accountants, wherein there is a silent USD budget. We actually expected to be preparing our budgets in ZIG and be reporting our financial statements in ZIG. But there is an underlying USD budget that we usually then get to have because of the previous challenges which we are having of inflation and an unstable currency. What's the effect of this USD silent budgeting? Does it affect the functional currency of the organization? And is it proper to then refer back to the US dollar budgeting when you get to a point of now wanting to comment on the variance analysis, wherein there might be movements of rates and inflation? Thank you, sir.
Okay,
Maybe Mr. Mutunga,
it's okay. So,
if I can combine that question with another question from Tatenda, so that you can answer them once. To what extent does the virament affect budget performance analysis, considering that it's affecting two different expenditure lines? That's the question.
okay, it's fine. Before I go to Tondre, I think let me respond to that. You find that when I was talking about reconciliation earlier on, to say you also, it's important to compare like for like, and where there's a virament, definitely you find that technically the budget has changed because you have, I used the word technically for a reason, because you have moved funds from one budgeted line item to another. So because of that now, comparison has to be made for what would have actually happened. Performance-wise, I'm sure you find that Virements, there has to be, for me, there has to be a reason, something that is valid. And if the original budget has to be compared with actual, this is where, in terms of the explanations, that also have to come through to say, an example of a pandemic that would have happened. Definitely, that's a very valid example. Funds were moved from this line to this, but if it is within the organization, definitely it has to be part of the explanation. As when you compare the budget and the actual, so just to make sure that it comes in the explanation in terms of the what would have happened, budget versus the actual. Compare then your variance, why is the variance like that? Then in terms of the earlier speaker who had said that you have a USD budget, and because of the inflation, exchange rate movements, there was this silent budget. I will answer it in two parts here. If it is from a public sector, but there are also state-owned enterprises, the earlier, I think George earlier talked about parastatals. Not sure how it may be. If it is that USD budget has been, if it is approved and you are now complying with IPSAS 24, definitely now you have to compare if it is approved, because this is if the USD budget is the one that is approved, you now have to compare. You now have to compare back. Or if possible, just you now need to if you are reporting in the local currency, which is our currency, you now have to move the USD budget to the local currency for comparison purposes, depending. But like I said, also some organization would prepare just to comply with IPSAS 24. They have just a separate note where you can now say, we have this budget, let's in USD, let's compare the actual also in USD as a separate note. But if it is the other way, you may also, I think, let's compare in terms of the ZIG, how our performance here was. That means definitely you have to compare. So one of the two, either the actual or the budget, has to be converted to the other currency for comparison purposes, so that you can also comply with the IAS with IPSAS 24.
Thank you very much. Well explained. I think you are answered. Are we okay now?
I think we're good.
Thank you very much. Mr. Mpunga, the guests are confirming that they are now good. So there is any other question? There is no any other question right now. Colleagues, allow me to thank Mr. Mutuma for the valuable insights today. And as you all can confirm, today's discussion has shown us that the budget implementation is not simply about spending an approved allocation. You also concur with me that it is about maintaining control, responding to changes in circumstances appropriately, managing Virements responsibly, understanding variances, and reporting performance transparently. The key message I take from this session is that a budget is both a financial plan and an accountability instrument. Strong implementation, therefore, requires credible planning, disciplined controls, timely monitoring, proper authorization, and clear reporting. So at this time, on behalf of the Institute of Chartered Accountants of Zimbabwe, I sincerely thank Mr. Modern Mutumwa for sharing his expertise. And I thank all participants for your active and interactive engagement. The questions that you asked, we trust that the lessons from today's session will strengthen the budget implementation, audit readiness, and IPSAS 24 reporting across all our institutions. I would like to thank you all. Thank you very much.
Thank you so much, Mr. Newton. I would just lay out the next, just an announcement to all our public sector members that we have on board here. So in 3 weeks' time, we're going to have our public sector professional accountants workshop, the one that we do specifically for all PSPAZ members only. So mind you, this one only PSPAZ members are invited to the 3rd edition of the public sector professional accountants workshop happening in Leopold Rock, Mutare, that is Vumba, and the theme this time is AI and sustainability, trying to shape the Zimbabwe's public sector future. So if you haven't registered yet, just make sure that you register through the QR code that is on the screen for you. So this workshop is from the 10th and the 11th of September. 10th and 11th of September, and the investment fee, which is the conference only, will be just 485 inclusive of VAT. So just make ways to make sure that you have registered for the conference, and we'll be ready to see you. We'll be ready to see you in Vumba in September. Again, as I take it through from Mr. Mjena, have a great day and enjoy the rest of it all.
Thank you,
Hi, my name is Dr. Zivanai Majambe. I'm excited to invite you to join the Environmental, Social, and Governance ESG Sustainability Certificate course offered by the Institute of Chartered Accountants of Zimbabwe, IPSAS. This 3 months, 100% online course is designed to equip you with the essential skills in ESG sustainability reporting, whether you're a professional or you're simply new to the field. So you will gain comprehensive understanding of the ESG sustainability frameworks and the strategies, including the reporting processes. With 12 verifiable CPDs, this course will prepare you to lead sustainably. So don't miss out. Contact the details that are written on the screen or simply scan the QR code right on the screen. Register now and let's work together towards a sustainable, bright future.
This is a Vimbiso marathon race. The reason why we are doing it is just for the sake of us raising funds for all those underprivileged young people that needs to be chartered accountants in the future. So this race is for a cause for us to nurture all young chartered accountants from varsity up to being a chartered accountant. So that's the reason for this race. So we ran for the cause and we ran for it all.